What is happening in the housing market since our last update at the beginning of September? Well, we have new reports with regards to pending home sales, existing home sales. We also have an update on the consumer confidence numbers, as well as an update from the Fed with regards to interest rates and what they plan on doing for the next few years. We're going to dive into all of that data here in just a moment. And I'm also going to give you my take as a real estate agent who's on the front lines, helping clients buy homes, helping clients sell homes, and give you some first world experience as to what is happening in my market in Southern California. But before we do that, I want to take a minute and introduce myself. My name is Jeb Smith. I'm a real estate broker here in Southern California. My channel is all about helping buyers, sellers navigate the home buying process. I'm not here to give you clickbait information. I'm giving you real data as someone who does this on a daily basis. I'm not here to pump you up on the housing market, tell you to buy, tell you to sell. I just want to provide you firsthand, accurate information and let you make informed decisions with that. So if that's of interest to you at all, do me a favor and hit that subscribe button. And if you like this content, give me a thumbs up. It helps people see it, helps me educate buyers and sellers and guide them through that process, which can be a strenuous one, especially at the moment. And if you have comments about what I'm talking about in the video, something I missed, something you don't understand, comment below. I'll go back and address those for you. But let's take a minute and talk about something that came out within the last 2 weeks since our last update, and that was the Fed. The Fed met and had their normal meeting, and they released their Fed minutes. In the Fed minutes, they basically came out and said that they are going to keep interest rates low until 2023. And they've never in the history of having Fed minutes and publishing data really given a definite time frame on the outlook of how they plan on adjusting the Fed funds rate. And with that said, that's 2 years from now, over 2 years from now, that they more or less don't plan on making any adjustments to the Fed funds rate. Now, what does that mean? Because the Fed funds rate isn't tied to interest rates. A lot of people think that the Fed funds rate goes down to zero, interest rates are going to go down to zero. That's not how it works, but the two typically follow each other. So as the Fed funds rate stays low, chances are interest rates are probably going to stay low. And we've talked about that for the foreseeable future, interest rates will likely stay low. What does that mean? Well, that means as a buyer, money is going to stay cheap. But at the moment, we don't have a lot of inventory on the market. So what does that mean for you as a buyer? We're going to talk about that in just a moment as we look at, the pending home sales and existing home sales data and inventory levels as a nation and what that might mean as a buyer as well as a seller. So let's take a minute and dive into that data. All right, let's start today's conversation by talking about existing home sales, which is essentially homes that have closed. Now, this report came out on the 22nd of September, so it's about a week old. Now, the pending home sales data that we're going to go over in just a moment, that came out yesterday, but let's dive into the existing home sales data, bring it up here and take a moment and take a look at it. So what we have is existing home sales continued to climb in August. That's marking 3 months of consecutive gains. Each of the 4 major regions, both month over year and year over year growth, with the Northeast seeing the greatest improvement from the prior month. Now, total existing home sales includes single family homes, townhomes, condos, that sort of thing. So it's not, commercial property, not anything like that. It's just residential property, 4 units or less, nothing that's considered commercial. That rose 2.4% from July to a seasonally adjusted annual rate of 6 million in August. Sales as a whole rose year over year, up 10.5% from just a year ago. Total housing inventory. So this is important data here. This is one of the things that I pay attention to the most, because this is going to kind of dictate where things go as we move forward. So total housing inventory at the end of August totaled 1.49 million units. That's down 0.7% from July and down 18.6% from 1 year ago. So unsold inventory sits at a 3-month supply at the current sales pace. That's down from 3.1 months in July and down from 4 last year this time. So what does that actually mean? Well, that is showing you right there that, there's not a lot of supply of homes. And as we talked about, the Fed plans on keeping interest rates low for the foreseeable future till 2023-ish. So as inventory stays low, interest rates stay low, you're likely going to see buyer demand stay where it is. But let's go here and continue to read this. Properties typically remained on the market for 22 days in August, seasonally equal to the number of days in July and down from 31 days in August of last year. 69% of homes sold in August were on the market for less than a month. That's mind-boggling. Normally in a seller's market, days on the market can trend upwards as high as 60, 65 days and still be a seller's market. We're down below 30 days at the moment, which is unheard of. And that's as a nation, not just locally. So this is happening everywhere. First-time buyers were responsible for 33% of sales. Why that's important is because we've talked about in other videos how millennials are essentially going to make up the largest buyer pool going forward. They are in the prime buying age, which means you've got all of these buyers coming into the market. Individual investors or second home buyers account for many cash sales, purchased 14% of homes in August, and that was equal to the same rate last year. So investors, second home buyers are still buying at the rate they were a year ago, which is important. And another factor here, because a lot of people are talking about foreclosures coming, all the forbearances ending, whatever, distress sales and foreclosures represented less than 1% of sales in August. That was the same as July, but down from 2% a year ago. So you got less distress sales now, less short sales. Now, will you have some based on forbearance ending? Yes, you're going to have some people that just never called and got forbearance. But at the moment, that hasn't come to the market and likely won't for another 6, 8, 12 months from now. So for the foreseeable future, it's not going to have an impact. Let's talk about the regional breakdown for a minute. For 3 straight months, home sales have climbed in every region compared to the previous month. Median home sales or prices grew at double-digit rates in each of the 4 major regions from 1 year ago. I'm not going to read all of this, but August 2020 saw existing home sales in the Northeast jump 13.8%. In the Midwest, it increased 1.4%. In the South, it rose 0.8%. And in the West, 0.8%. And that was a 9.6% increase from a year ago. The median home price in the West is now $456,100. That's up 11% from August of last year. Now, I'm going to put all of these reports in the description below in case you want to go take a look at them and read them yourself. But now let's take a moment and look at pending home sales data. So I'm not going to go over this entire article because I don't think that it's necessary, but pending home sales index increase reaches record highs as sales ascend 8.8% in August. Contract signings exceed pre-pandemic levels. Now, pending home sales are sales going into escrow. So they were up 8.8% in August. Now, keep in mind, just because they're pending home sales doesn't mean they're going to convert to existing home sales. They're not necessarily, all of those aren't going to close, but a lot of them are. So you're still going to see positive existing home sales data going forward. And as I've mentioned in previous videos, all of this data is a month off, right? So right now we're looking at data from August, and in November we'll look at data from September, so on and so forth. It's just October rather, we'll look at data from September. So it's always a month off. But it does go on to say that each of the 4 major regions experienced growth in month over month and year over year pending home sales transactions. Pending home sales are a forward-looking indicator of home sales based on contract signings, rose 8.8% to 132.8, which is a record high. And Lawrence Yoon, he's the chief economist for the National Association of Realtors, provides very accurate information. He's been talking about a positive housing market this entire time. But one of the things he said is additionally, the Fed intends to hold the short-term Fed funds rate near zero for the foreseeable future, which should, in the absence of inflationary pressure, keep mortgage rates low. That will undoubtedly aid home buyers continuing to enter the market. He points out that pending home sales are outperforming many pre-pandemic averages, but says that without matching supply, the recovery will not be sustainable. So what he's saying is that if we don't start to see more inventory come to the market, you're going to see a slowdown in sales.
But what you're going to see is home prices probably continue to go up because you're going to have less homes and a lot of buyers bidding for them. All four regional indices recorded increases in contract activity on a month-over-month basis in August. So that is the data. At the same time, we received positive news on the consumer confidence numbers, which is basically business owners looking out into the economy, and they're more positive than they have been in a very long time. So a lot of people are seeing positive things happening in the market. Now, as a realtor on the front lines, I promised that I would share some experiences with you. What I'm seeing is homes sell very, very, very quickly. I'm representing buyers and listings. Listings are selling at record paces when they're priced correctly. Buyers, every single offer that I've put in the last month has had multiple offers and gone over asking, almost in every single scenario. I have a property that I put on the market yesterday. I've already got 3 calls on it today for people wanting to see it. I'm properties that were 15 offers on them. It's incredible. So the buyer demand is there because interest rates are low and there's not a lot of inventory. I expect that to continue for the foreseeable future. We'll likely see less inventory as we move into the fall, like normal, which is going to create more pent-up demand. So as more homes come to the market, you're going to see further escalation in prices, in my opinion, and likely a market very similar to this as we move into 2021 and towards the end of next year.
So now that you've seen the data with regards to pending home sales, existing home sales, as well as consumer confidence, what are your thoughts on the market? I've been talking about this since May, actually since the beginning of the year, really, that we have a strong housing market. But as we went through the pandemic, I kind of held back a little bit, wasn't real sure where the market was going to go. And in May came out and basically said that we're probably going to have a housing market that's very strong just based on the activity that I was seeing as an agent on the front line. So, I'm not here to boast or brag. It's just, I'm on the lines following this stuff on a daily basis, and I'm following mentors who, know the market. And these are people that I'm taking information from and also providing it to you. So what are your thoughts on the housing market? Where do you think it goes? I would love to hear your thoughts in the comments below. But as always, as I get more information, more data, I'll continue to put it out to you. I appreciate you taking the time to watch. I appreciate your support. We'll see you again soon. Have an awesome day. Bye-bye.